Welcome to our weekly Forex and Futures forecast. This is Jay Norris. I teach trading at Trading University. First market we'll take a look at will be the Australian US dollar. There's the Aussie US dollar. You can see it bottomed right on our long-term support. We've been saying that for some time. You got pretty good support down there. You know, may not yet be the time to go longer term. However, we think price-wise, you're at that area where this guy's probably going to start to bottom out. We'll see if it carves out a bottom for us. You see a brown line right there, 2/3 retracement from that last impulse move down. You know, as long as you're below that, you're still in a downtrend. However, if you can claw your way above there, give yourself a couple closes above that level, really just a couple closes on the 4-hour, maybe one close on the daily above that, then that's going to clear the way for us as day traders to go after this guy on the long side. So Aussie US dollar, we think price-wise, you're probably really close to a bottom. We'll see how long it takes to carve one out, put it in historic perspective. There's the monthly chart. Boy, you go all the way back to 2001 to the high at just above 110, the great bull market. You've traced 2/3 of that right now. So that's generally an area on the chart where both, interestingly, historically, longer term, shorter term, that's always an important level. So let's keep an eye on the Aussie from a shorter term perspective in the context of that historic perspective too. So really, really cool, really interesting place in the chart for the Aussie right now. Next market, dollar Swiss. I'm a broken record here. I think long term, you're in an excellent area to continue to go long here. Shorter term, however, I should say shorter term, intermediate term, there may be some downside here. You took out a pretty good resistance here. Look at that. You retraced 2/3 of that impulse move down, that late summer move. You retraced quite a bit of that. On the other hand, you're still below longer term resistance. We probably anticipate some sideways action here. Let's give it the historic perspective. There's the monthly chart. You take out that resistance and there's a whole lot of room above. So from a historic perspective, from a longer term investor's perspective, this guy's a buy. From a shorter term trader's perspective, we probably got to wait and see what that Fed's going to do. I've been beating that same drum. I think it's inevitable that the Fed is going to raise rates. I think you need to be long dollars when that happens. And that's a longer term thesis. You just don't want to get in the way of the Fed a little bit longer term. Shorter term, intermediate term, we're going to see what's going to happen. This guy, Swissy here rolling over short term. On the other hand, later this week, Thursday, you got a big Fed announcement. Well, I guess from a shorter term perspective, that kind of puts everything on hold, that FOMC meeting on Thursday. So we'll have to see. Next market we'll take a look at will be the dollar index itself. Same story, similar to the dollar Swiss. I think overall you're in a longer term sideways movement. I think that's going to end with a breakout on the upside when you put it in historic perspective. Here's a monthly chart. I think this is a bull flag. I think you're in the middle of a bull flag. And when the Fed does raise, you're going to see a breakout on the upside. And that's what I'm saying all along. From an investor standpoint, you have to be long the dollar. Shorter term, however, drop back down to a daily chart and even the intermediate term charts. You're probably making hay on both sides of the market. So definitely something to keep an eye on. Shorter term, intermediate term, there's nothing wrong with playing the short side of this guy. Similar, the long side in the euro, shorter term. There's the euro. As we pointed out last week, you have a nice pattern of higher lows, right? So you got higher lows, higher highs. Shorter, intermediate term, there's nothing wrong with making hay on the long side. On the other hand, when you put it in historic perspective, and you always have to view these markets from a historic perspective, let's just look at a weekly, and you can see how shallow this retracement has been overall. Clearly, from our perspective, this is a corrective movement, and you have to keep your eye on the big picture, which certainly is a bear market. Shorter term, however, nothing wrong with making hay on the long side for sure. Even on that daily chart, you can see you've had some nice trades on the long side overall. Thursday, we're going to see what's going to happen if the Fed's going to raise rate. I'd be more inclined to think that they, in fact, will raise rates. On the other hand, you really don't want to step out in front of that. Next market we'll take a look at will be the gold market. Gold, interesting, pretty weak. And I say interesting because gold tends to be a leading indicator market for us. You see you had long-term support there just above 1100. It carved out a bottom just below there. You see it more on on a monthly chart, there you go. You can see the support held. The market started to stabilize. On the other hand, back to the daily chart, a little bit shorter term, you had 2 daily closes below that significant support right there, that 2/3. So 11, we'll see if 1100 holds. If it doesn't, I think this bodes well for the dollar overall. A weaker gold market, definitely a leading indicator of dollar strength. So let's watch the 1100 level in the gold. Surprise, gold's not a little bit stronger here, particularly given euro strength, giving dollar weakness overall. Last market we're going to cover here, we got to wrap this up. Today's opening kickoff in the NFL. I know everyone's got more important things to do, right, than be watching YouTube. It's football season. Here we go, 10-year note. We pop out to a weekly, give you a little bit more history on it. This is the interest rates in the United States. That's 10-year rates in the States. And you can see that green box that marked our buy zone, that marked the support zone. That's the second time this year the market's put in a higher low, right? So you put in a higher low, that's a bullish development. We think, popping back down to a daily, that this breakout that we're seeing here is a harbinger of higher rates to come, probably much higher rates to come as you start the slow crawl higher here, a bull market for U.S. interest rates. And we think the impetus for that is going to be when the Fed raises rates, either this Thursday or the next meeting out. Thanks for watching us. My name is Jay Norris. I teach trading at Trading University. And we'll see you next week.